Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and this is where we discuss everything about the stock market's opening action to help us understand what to make of the market's move today and what should be your strategy. I'm also joined by a very special guest today. Nilesh joins in from Centrum Broking. Good morning, Nilesh, and thank you so much for taking the time out. Well, it's a bloodbath on the street, is what we can see right as we start off this week, and some of it was expected as well. Looking at the global cues, the U.S. markets shutting shop sharply lower on Friday. The Asian markets also opening the deep cuts right here. And we've seen, in fact, about 1,400 points gone on the Sensex right in the early trading session. 1,000 plus points gone on the Nifty Bank as well. The Nifty is trading down by 300 odd points at 17,260 odd levels. Most of the sectors, in fact, all the sectors right now are trading with sharp losses right here. What do you really make of this kind of a sharp move on the downside?
Very good morning to you, Sakshi. Sakshi, if you look at the overall broader structure of the market, we have seen a strong momentum in last few weeks. I would say in last entire August series. Even if you look at a good run-up, we have already witnessed, and markets have certainly gone into extremely over territory. So this kind of correction is a part of a bull run, and it should be taken as a good opportunity on the fresh entry on the long side.
Okay.
And one should not be panicked because once we reach the overbought territory, there has to be some sort of a correction. That is what currently we are witnessing. Although this cut is slightly surprise and shocking for everyone because it wasn't expected all of a sudden. But yes, I think it's a good opportunity to make a fresh entry in stock-specific action that is likely to continue. And we are not expecting any major downside. But yes, there could be some sort of a consolidation. I'll just highlight the range for the Nifty. 17,000 is the major support, that is 200-day moving average. So as long as we are trading above that, I think there should be opportunity to create a fresh long position at current level. On the higher side, 70,500 is the immediate hurdle, and any decisive breakout above 70,500 will definitely open upside for 17,800 to 18,000. There will be consolidation that is likely to continue in the broader range of 70,000 to 18,000.
Okay, understood that. So two big points right here. Not to create any panic with these sharp 1,000+ point cuts that you're seeing on the street. This could in fact be an opportunity for you to buy into some quality names. Stock-specific action to continue from here. And thirdly, Nilesh does not really expect sharp downside from the current levels as well. Keep these levels in check as you're moving along. But we do know that the big crash has not just happened because of technical indicators like what Nilesh has been pointing out, that after a sharp run-up, some bouts of correction is warranted. But the trigger has been the US Fed, which has been extremely hawkish, and that has indicated that their fight against inflation will continue, despite the fact that it may cause some pain on the economic growth front. Now, that is what has spooked the street right here. But Nilesh, help us really understand if this kind of a strong stance is to continue on the US Fed. We do know that the central bank in India may not be completely opposite as well. There could be some similar line movements that we can expect right here. So how will the markets really trace all these movements? Will we continue to see these sharp downticks going forward, as in when the RBI also moves along the same lines?
This kind of hawkish statement that we have already seen in the past and market has already digested. And I think going forward, there will be some sort of consolidation, as I mentioned. And this kind of consolidation are the good opportunity for fresh entry. And going forward, I think looking at the inflationary pressure in the US market, the US has certainly taken the right decision in the past, and that is where the opportunity comes in. Even if we see any further rate hikes from our monetary policy going forward, I don't think so there will be any further selling pressure in the market. And a stock-specific and sector-specific move is likely to continue. Now, the sectors that we are liking and that are looking positive are Nifty Auto Index, where we have hardly seen any sort of correction. It is trading near all-time high territory. Apart from that, FMCG space is also giving a good opportunity. It's considered as a good hedge in the volatile market. So one should definitely focus on FMCG space and also a sort of a pharma space. I think today's fall is a good opportunity for fresh entry in that particular area as well. And lastly, defensive space is certainly buzzing since last 1 week. And counters like HAL, BEL, I think these are the good counters which have already regained the momentum in today's trading session in spite of the weakness in the market. So one can definitely look for these stocks and sector specific action. I still believe that we are likely to see continuation of the up.
Okay, so understood. In this kind of a market, the defensives and the defense majors could be your major defense against this kind of a sharp fall. So keep your eye out on these specific sectors and look for opportunities in these sectors as we move along as well. We also have another major event coming up this afternoon, Nilesh, and that is RIL AGM as well. We've not seen a very, very sharp fall, but just a slight downtick on Reliance Industries stock in this early trading session. How do you really, but the brokerage houses have actually pegged much higher targets in today's session. We've seen CLSA pegging targets of Reliance Industries over 3,100 as well. How are you gauging Reliance Industries at this point in time? We have seen mixed reactions historically. Whenever the AGM happened, there are times when Reliance Industries really rose sharply, perhaps in 2019. But the following years, we've also seen some dips as well. So what is the perfect strategy to deal with Reliance Industries stock today?
Well, Sakshi, as I mentioned, that these are the kind of opportunities for picking up the quality stocks, and Reliance is one of them. It's a good quality stocks, and we have seen a good amount of consolidation in the past around 1.5 months. Now, in today's correction, it has slipped below its 21-day moving average, which is placed near about 2590. Somehow it is regaining the momentum. But even if you look at on the lower side, 200-day moving average major support is placed at 2500, and also 50-day moving average is also placed near about same levels. I think even if we see any further correction, that should be used as a buying opportunity in a staggered manner. One can definitely look to buy into Reliance Industries. On the higher side, the immediate hurdle is still placed as 2690 to 2700 zone. And even if in case we see any breakout above 2700, then definitely it is likely to inch towards its previous all-time high levels of 2800 plus. So that is very much likely in next 1 or 2 months. But at current level, I think it's a good opportunity to make a fresh entry and buy in a staggered manner.
Okay. And apart from this, any top of your list stocks that you want investors to keep on their radar in today's trading session, perhaps towards the end? We don't know whether the markets will actually take a U-turn from these levels after digesting the first downtick. But do you see some stocks that could actually perform very well today?
Yes, of course. So as I mentioned, defensives are certainly looking very much positive. So a counter that we are liking is BEL, Bharat Electric Limited. So that particular counter is trading at all-time high levels, and it is also showing strength. I think one can definitely buy this particular counter on declines and at current level as well. 322, 325 could be the immediate target from a short-term perspective, and the stop loss should be placed below 300. The other counter from the same space can be bought at current level is HAL. That is trading near about 2290 levels, and this can be added for the upside levels of 2350 to 2400. Stop should be placed below 2200. And also FMCG space, as I mentioned, is a good defensive and looks positive. So Kolpal can also be added at current level. 1595 is the current market price, and I believe in a very short term we can expect the upside levels of 1650 to 1700. So 1650 should be the target. Stop loss should be placed below 1570.
Okay, understood. So top stocks from Nilesh's radar are BEL, HAL, and Kolpal as well. So keep those stocks also on your radar in case you're looking for trading opportunities right here. Thank you so much, Nilesh, for being with us on this show and discussing all these important, factors that are going to be at play in markets today. Thanks a lot for being with us.
Thank you, Sakshi.